It's 10 a.m. in Lagos, Nigeria, and it's time for Business Morning on Channels Television. Good morning and welcome. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us wherever you're watching from. Let's take a look at what's happening in the oil markets. Oil prices were a little changed today following overnight losses from a stronger dollar and demand concerns with a slow production restart in the U.S. Gulf of Mexico, providing some support there. U.S. West Texas Intermediate crude futures rose 11 cents to $68.46 a barrel, after sliding 1.4% on Tuesday following the Labor Day holiday. Brent crude futures fell 2 cents to $71.67 a barrel after falling 0.7% on Tuesday. Producers in the U.S. Gulf of Mexico are still struggling to restart operations 9 days after Hurricane Ida swept through the region with powerful winds and drenching rain. About 79% of U.S. Gulf production remained offline on Tuesday, with 79 production platforms still unoccupied. About 17.5 million barrels of oil has been lost to the market so far. Gulf's offshore wells make up about 17% of U.S. output.
And back here in Nigeria, 16.8%. That's the rate. Economic advisory and research firm Financial Derivatives Company expects forecasts for Nigeria's headline inflation numbers. The latest forecast by FDC, which represents 0.58% drop from 17.89% lower inflation rate recorded in July, and would mark the 5th consecutive month decline this year. At the same time, the economic research firm projects a decline for all inflation sub-indices except core inflation, with the month-on-month inflation estimated to fall to 0.88%, while food inflation is expected to moderate to 20.85%. FDC largely attributes the slowdown in inflation to increased food supply due to the harvest season, as well as consumer price resistance. Meanwhile, the National Bureau of Statistics is expected to release the country's official inflation report on the 15th of September.
All right, we'll see if it's going to beat expectations this time.
Yeah, we're watching that space.
We're watching that. Well, the Lagos State Chamber of Commerce and Industry, in line with its objectives of fostering commerce and trade in the nation, is collaborating with various security agencies to find solutions to the insecurity problems and its impact on commercial activities. And this was the goal of a one-day seminar organized by the LCCI, where heads of security agencies met with business executives at the Commerce House in Lagos. Do take a listen.
On behalf of the chief host of today,
it is a security summit organized by the Lagos Chamber of Commerce and Industry. The annual event brings business owners, executives, and security agencies together to share their ideas and seek solutions to the various national security issues relating to the nation's business environment. Mindful of the third wave of the COVID-19 pandemic, the organizers prefer to have only a handful of participants on site. Given the current situation in the country, business owners now see the need to collectively pay more attention to how security impacts their businesses. That's why the LCCI is consulting with the relevant security agencies with a view to protecting the nation's economy.
Insecurity and armed conflict results in the following outcomes. 1, deaths and injuries. 2, paralysis to economic activities. 3, GDP losses. 4, cost of peace building and peacekeeping activities. And 5, refugees and IDP camps. Insecurity does not only impact society, but it also reduces the positive benefits that security and peace bring to the macroeconomic performance of countries.
Implementation can only be catalyzed by the private sector entrepreneurs tirelessly reminding government of the need to do the needful.
Clearly abreast of the impacts of insecurity on businesses and citizens, the security chiefs restate their effort in protecting the nation.
Current security challenges facing Nigeria, our strategies for dealing with these security challenges: kinetic military engagements, ongoing efforts to protect Nigeria's blue economy, non-kinetic efforts, non-traditional roles and tasks of the armed forces, and try to chart the way forward.
The Navy has taken the gauntlet to secure our waters by activating dedicated operations and initiatives to enhance its policing capability towards the peaceful use of the nation's maritime environment.
Lagos, being the economic nerve center, is not left out.
Without missing words, the 2021 dialogue series of security meets business is as timely and pertinent as ever. I'm optimistic and certain that the series will assist the government and stakeholders in trade and industry to have a clearer understanding of security situation in Lagos State and fine-tune a way forward.
Security talk shops are indeed useful, but Nigerians would be more impressed to see these discussions backed up with deliberate and strategic action.
Well, the executive chairman of the Federal Inland Revenue Service, that's the FIRS, has said that impending registration of Twitter and other social media platforms in the country is expected to boost the agency's projected revenue for 2022 by about 5 trillion naira. Meanwhile, the FIRS is seeking the approval of the National Assembly to further amend the Finance Act to accommodate online businesses in its tax net. How is this supposed to work? What are the details of it, and what are the implications? We have Oladejo Adeyemi, manager at Anderson, joining us for this conversation. Good to have you, Oladejo.
Good morning.
Good morning.
Yeah, good morning, Hini, and good morning, Ladi.
Great to have you.
Thanks for having me.
Yeah, so the FIRS has a lot of tax conversation going on now.
Oh, yes.
The one in Rivers and Lagos State, and I think Kebbi was the one is on the opposite side. I mean, that's on the one hand.
Yeah.
But here now we're talking about taxing social media activities, and there seem to be a lot of consenting voices to it. What's wrong with this?
Okay, like you rightly said, these are interesting times.
Yep.
You know, quite a number of things are happening in the tax space. And specific to this issue, you know, the main challenge is nothing really has changed within the tax regime, you know, in recent times to have aggravated concerns of taxpayers, you know. But given the comments, you know, that the chairman said, you know, specific to taxing online businesses and what have you, in terms of the legal structure, you know, that had been achieved much earlier. You know, you did mention the Finance Act, you know, which was the one for 2020, you know, which was recently passed in January, you know. So there's been effort on the part of the government to ramp up collection and also in widen the tax net, you know, so to speak. So, but fundamentally, in terms of whether there is anything that has changed or there is a special regime, no special regime. It's the same set of laws that we've had, at least for this year, you know, that are still going to be operational. So what I just think the issue is really is the fact that using the word online businesses, it could be very ambiguous.
Do you think they fall into informal?
Exactly. So that's the concern. And if you take a leaf from the examples cited by the chairman, you know, mentioned the likes of Facebook. You know, you and I know that Nigerians wouldn't have a challenge with a Facebook paying taxes in Nigeria.
Right.
You know. So, but perhaps it has been misconstrued as regular businesses, regular Nigerians, you know, trying to make ends meet from regular supplies or Instagram or whatever it is, and that's why you have that level of agitation.
So what you're trying to say is nothing has changed. It's just asking Facebook, Twitter to pay, not the businesses who are using these platforms.
Absolutely, absolutely. And you know why? Because the tax laws have accommodated over the period these businesses. In fact, one thing that most Nigerians may not be aware of is the fact that these businesses may actually not be taxable in the real sense, because given the recent changes, amendments have been made to the tax laws, the rates, at least for corporate income tax, for instance, which is the mainstay, you know, or the main concern, the rates have now been graduated such that certain businesses with specific amount of revenue, say less than 25 million, will now have 0%, as tax rate. So the challenge really is in how much of that information is out there, compared to what is hitting the wave in terms of, online businesses are going to pay taxes. So there seems to be some sort of lack of alignment with what you have in the law and what people are taking from it. Because in the real sense, if I'm a business, I'm a small business owner, I'm running
And
my
you're
business.
using, and you're doing online business, running your business online.
Exactly, and I'm using every tool possible, for me to use. But my revenue, based on the laws, as we have them now, my revenue threshold is less than 25 million.
So how does
it's
that...
0%.
Right.
So I think what you're on the other hand trying to say that if the government really wants to expand its tax net to bring in online business, there has to be a change to the law.
Not exactly. This is what the issue is, really. Before now, prior to, say, 2019, 2020, the laws, okay, there's a particular section in the Companies Income Tax Act, Section 13, so that sought to tax businesses, particularly non-resident companies. You would need to have some sort of physical presence or fixed base in Nigeria before you could be deemed as doing business in Nigeria, right? So you could have transactions concluded online, but based on the extant provisions of the law, as they used to be then, you didn't have any tax obligation. And that changed. That changed with the Finance Act, with the advent of the Finance Act 2019, which was passed on the 13th of January 2020. So there've been effort on the part of the government to ensure that the net is widened and the level of activities that those businesses are doing in Nigeria, are reflective of the level of contribution that they have. And that's what brought about this significant economic presence order.
And, the federal government has been pushing for, companies like Twitter to actually open an office in Nigeria. So that's the aim of that, basically.
Absolutely, absolutely. Because the essence is we then moved away from physical presence to significant economic presence. So to the extent that a company, can be seen as to have contributed significantly and add some sort of significant economic presence in Nigeria, then that company would have taxes payable, in Nigeria. So breaking that down to actionable pieces, is really the challenge that we all as a nation, the FIRS, the government is trying to, come to, quite specifically.
All right. Talking about expanding the tax net, where are the limits here?
Okay, you see, everywhere in the world, right? It's a social contract, People pay their taxes, right? Entities pay their taxes. Government, in turn, is required to use those taxes to fix, amenities and things that they could see. However, in Nigeria, that contract seemed to have been impaired, in some sort. So the challenge is, for instance, if you look at our GDP, tax to GDP ratio, it has stood at 6% for ages. So you more or less have the same set of people, the same entity, the same income bracket earners, paying taxes. So the effort is to expand that net. So your question is, where are the limits?
Where are the limits? Yeah.
There are no limits, really. There are no limits because based on the law, individuals are meant to pay taxes to the state government wherein they reside, the inland revenue of those states. And that's what is surprising when you see those individuals owning businesses, sole proprietors agitating online to say, oh, they want to tax us. Because even if they are going to tax those individuals, those taxes will not be paid to the FIRS. You understand what I'm trying to say? So there seem to be a lot of misconception out there, So there are no limits.
But when we talk about, you talk about the fact that Nigeria's tax to revenue stood at 6% for a long time. Is the issue to look for new taxable businesses or entities? or to maximize what we have? I mean, like you noted, which has been the conversation for a long time, is the same set of people who are paying these taxes. And then we have a lot of compromise. You know, when you talk about the issue of tax, the lawmakers sat the medium finance meeting that held for weeks, and we had companies that are not paying their taxes, or are not paying the right amount. And we heard of companies that are evading tax because they can't trace them. And I'm wondering, these are registered companies, and we say we can't trace them. How is that possible? So I think it just it speaks to a lot of weaknesses in the system. Not necessarily we need to look for new laws, but the one that we have, are we already optimizing what we have?
You are quite spot on, you know, and we have the laws, you know. Before 2019, 2020, the challenge used to be that some of these laws are obsolete. They no longer reflect current realities. But a lot of changes, you know, have then happened, you know. So, but I mentioned something the other time. There is a fundamental, you know, break in trust. Now, the government had to spend a lot on collection. They have to audit your company. They have to go after you even before you pay, even before some of these entities pay their fair share. You know, unlike where you encourage voluntary compliance. You know, so in terms of maximizing what we already have, one major tool that can be used or can be adopted is the things that government could do that would enhance voluntary compliance. Because what that would do is when people see that these taxes that I've paid have been judiciously utilized, they'll be encouraged to pay more and more.
And more people will be encouraged to join in voluntarily.
Absolutely. And that pushes down the cost of collection on the part of the government.
So it's everybody has to play a part, basically.
Absolutely.
The government, businesses,
absolutely,
you know, to make sure. Okay.
So what else did the Financial Act bring into the scene?
The Finance Act.
Their Finance Act.
Okay,
the
great.
The amendments.
There are quite a lot of amendments. At least the one passed for 2020, the one passed in 2021, which is 2020 Finance Act, amended about 14 different acts, you know, and there are a lot of provisions in there. But if we narrow down to the specifics, you know, for companies, for instance, or for individuals, there used to be this controversy around what constitutes gross income for an individual. So for the purpose of computing what we call consolidated relief allowance and knowing how much allowance should even be due to me before I know what I have as my taxable, you know, taxable income, that has been resolved. You know, there's a provision there that spells out, you know, specifically what gross income should be, you know, and those kind of clarifications, you know, have now been introduced, you know. So there's a lot happening in terms of.
And there was something about electronic
absolutely
usage also.
Yeah. So given that the government is looking for ingenious ways, as it were, you know, to bring in the money, you know. You want to talk about, I've talked about the significant economic presence order. How to action some of those things will require some reliance on digital platform and assistance, you know, with technology. Now, some of the challenges that they've run into in the past, you know, was that you couldn't deploy these things because you don't have legal backing for them. You know, there is nothing in the law that says, oh, FRS could use technology on my own system. So you would see taxpayers or companies, you know, pushing back. You know, so they then sat back to say, oh, if we amend a particular section in the FRS Establishment Act, which is, I think, Section 25, you know, there are about 3 new provisions there that then gives the FRS the powers, you know, to be able to rely on technology. You know, so much so that the reliance of technology can assist collection, and that's what you see with Tax Pro Max. You know, the filing that was done for this year, for instance, you couldn't just walk into the bank and make payments. So things are closing up, but Nigeria, it's a developing country, right? So it will take a while.
So things are closing up. Things will keep developing.
Exactly, yeah. Exactly.
All right, thank you so much, Oladejo Adeyemi, manager at Anderson, for sharing your thoughts with us on the proposed taxing of social media.
Thank you for having me.
Thank you.
And enjoy the rest of your day.
Thank
You
you.
too. Thank you.
So we'll take a break now. When we come back, we can go straight to the AFEX commodities market. To join us is Business Morning on Channels Television.
And it's time to review another week ended at the AFEX Commodities Exchange. For the week of August 31st to 6th of September, number of contracts was down 98%. We have Michael Martins, Portfolio Manager, with the details. Great to have you, Michael.
Hi, Laddie. Good morning.
Good morning.
It's always a pleasure to be here.
Good morning. All right, let's have the update.
Thank you very much, Laddie. So just to go over the commodities market summary, if you look at the table in front of you, you would notice that the total value of transactions traded on the exchange went up by a factor of 42.16%, from 2.37 million naira to close the trading week at 102 million naira. And the total number of contracts traded on the exchange, however, fell by 98%, from 146,252 to close the trading week at 3,569 contracts. The total number of deals traded on the exchange, however, remained unchanged at 17. With the ACI, which is the AFEX Commodities Index, it went up slightly by 1% from 424.87 points to close the trading week at 427.34 points. The AFEX Export Index, much like the number of deals, also remained unchanged at 168.08 points. With regards to the volume traded on the exchange in the week under consideration, we generally saw a decline across board, with the biggest changes happening with maize, which went down from trading 145,183 contracts to just trading 45 contracts this week. And for some of the commodities that gained higher volume this week, we have soybean, which traded up from 1,130 contracts to close the trading week at 2,225 contracts. And then we also have for paddy rice, which traded two contracts last week, to close this trading week at 374 contracts. With regards to the price changes on the exchange, we generally saw a decline across board for the major grains traded on the exchange, with maize being the first, losing 4.75%, losing 1,103 naira in the contract value to close the trading week at 22,097 naira per contract. And then secondly, we have soybean, which lost 6.78% in the contract value, losing 2,520 naira in the contract value to close the trading week at 34,664 naira per contract. And then lastly, we have paddy rice, which lost 2.27%, losing 500 naira in the contract value to close the trading week at 21,500 naira per contract. So that's largely all of what happened in on the exchange in the week under consideration. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can always download our app, which is available on iOS and also on Android.
Well, Michael, just before we switch the conversation, what's responsible for this decline in the price of grains, maize, soybean, paddy rice, all down for the week?
Thank you very much, Ini, for that question. As we have alluded to at different points in time during the course of this show, the commodities market is drawing to a close, and we are in the last months of the last volume of the last commodity season. So it is the case that in anticipation of the new harvest volumes that are going to come into the market, a lot of the people who currently still hold inventory are trying to sell off whatever inventory that they have in storage so that they can prepare for the new harvest season. So that's partly what is contributing to the lower prices that we are seeing for some of the grains on the exchange right now.
All right, Michael, thank you so much. Enjoy the rest of your day. We now switch over now and talk about smallholder farmers and financial inclusion, developing digital financial service solutions that are specifically designed for smallholder farmers and other value chain operators would be of great advantage. Smallholder farmers will be able to use credit systems, keep their money safe, and benefit from decreased transaction time and cost if they're included, especially in rural areas where smallholder farmers and other agri-SMEs typically find it hard to access financial services through conventional banking solutions. Well, to tell us what AFEX thinks and is doing about this, we have Oluwafunto Olashemo, the Financial Market Vice President at FX to speak today. It's good to have you. Been a while.
Good to be here. It's always a pleasure being here.
Always a pleasure having you too. So what can we say are the primary difficulties facing Africa's smallholder farmers today in terms of access to finance? We know they have difficulty accessing finance, but what are some of those hurdles that they have to deal with?
Okay, very interesting question. Let me start by saying that when you consider a small older farmer, you have to have at the back of your mind or on top of your mind that if smallholder farmer is first a customer and has very wide range of financial needs or needs in generally that only digital financial services cannot solve. And if we look at how the smallholders have been operating in Nigeria, a number of barriers have actually played out in preventing them from accessing financial services. One is the fact that most of the smallholder farmers that operate within our ecosystem are largely fragmented, and therefore they have this disperse across different geographical locations. So if you look at the traditional financial services, it's very expensive to deploy financial services to these smallholder farmers. Apart from the cost of deploying these financial services to them, there is also the issue of data. Most smallholder farmers do not have any form of identification. They do not have any form of financial footprint. So it is pretty much difficult for any financial service to be able to assess any repayment capacity or any capacity of the farmer to access these financial services. So those two are very critical. And if we look at our operations in areas where we've worked as AFEX, the first thing we try to do for a lot of these farmers is to even create an initial financial footprint for them by doing by registering them and enabling that they have accounts and BVN, which is for most instances is the only form of identification that they have.
Right, and but how critical is this digital financial services, being integrated with other, digital services?
Okay, again, as I mentioned, that you should consider when thinking about digital financial services, you should consider a smallholder farmer as a customer with lots of needs beyond the needs of their core occupation. So they have needs to pay bills, they have needs to buy things, they even receive money from distant relatives outside of what they sell. So looking at it from that perspective, then realize that you can't just offer digital services without integrating with other critical aspects of what they do, whether it's the agri value chain. And when you look at the agri value chain, you're looking at what the farmers would do from input to production to aggregation to offtake and the rest of them. So ability to integrate this would provide a more holistic value to the smallholder farmers. It would give him an incentive to use digital financial services because that digital platform becomes a one-stop shop, not just for the production of his farm, but also to address to all his numerous needs that he has.
Okay, so when we talk about policy direction and also the role of the private sector, to bring them closer to this financial circle that we're talking about and financial inclusion, what direction do you think we can propose to both the public sector and even the private sector?
So one thing that interests me or excites me very much is actually the growth of digital or fintech, as the case may be, within our ecosystem. However, there is quite a number of barriers for smallholder farmers to uptake the services provided by this fintech. One of them, a number of them actually, you have the trust issue in which it's generally in our environment, we have a trust issue. So there's that trust issue that comes to play. There's also a lack of understanding of the products and services that are being provided by these digital financial service providers. And even beyond the lack of the knowledge, there's also a mismatch between how the products are being developed and delivered to the actual needs of the farmers. So in order to encourage smallholder farmers to be able to uptake these digital financial services, number one, there has to be lots of deliberate effort by all stakeholders, particularly both the private and the public sector, to educate and enlighten the smallholder farmers on the arrays of products that are available to them and that would benefit them. Outside of that, you need lots of word of mouth. You need lots of iterations of your products before you even deploy them to market. A lot of times, financial services or digital financial service providers develop products and they expect the farmers to receive it with open hands. On the other hand, there are iterations that your products needs to go through, and you need to develop those products with the at the back of your mind that this is a smallholder farmer that is operating in a
But how
rural
profitable
environment.
is it? Because these fintechs we're talking about, they are also mostly SMEs, startups, they're also looking for profit. So how profitable is it for them to start getting engaged, with the smallholder farmers? Perhaps that's why they are not finding it attractive.
The way I would like to look at this is that, again, going back to the fact that the smallholder farmer is first the customer, is a human with several needs. A lot of challenge that we have with a lot of digital service provider in our ecosystem is they try to go into the spaces alone. There need to be collaboration because yes, digital services is on the rise, but there's still a huge cost. However, cheaper than the traditional, but the cost is still high. This cost can be minimized by collaborating. The smallholder farmers want an ecosystem of services delivered to him. If there is collaboration among this fintech, the cost of the product development and delivery would be cheaper, and then it would be easier for them to deploy these funds. Again, to be fair to the fintech, there is also the need on the state and the government level to create incentives that would encourage these fintech startups so that they can properly innovate, iterate their product, and let it go through that phase before they can start thinking. Also, number of schemes and incentives need to be put in place
at least to reduce
that cost, and then of course collaboration among the fintech to reduce cost of product development and delivery.
Okay, but how can the digital financial services in the agri sector improve all processes involved in the value chain?
So it goes back to my first point. There needs to be a development of an ecosystem. Everybody needs to see that digital financial services, again, as I mentioned, alone would not solve the problem of the smallholder farmers. It needs to be done in collaboration with other digital services. If you agricultural value chain largely looks at how your agriculture, whether from inputs to farming to aggregation to offtake, ability of a smallholder farmer to work within that tightly integrated value chain would ensure that he is able to reap the best value from the produce. Now layering digital service on top of it makes life a whole lot easier for them. So there has to be that collaboration and creation of ecosystem within all the stakeholders of the agricultural value chain. And in addition to that, the fintech also needs to be innovative of how they create their products. Product adoption and value increase within the agri value chain, they need to be innovative. They need to have at the back of their mind the farmers. What would typically work within one ecosystem might not work in another ecosystem. So you need to look at the specific areas where you're deploying the solution. What is peculiar about them? The way you would deploy digital financial services to the male smallholder farmers is completely different when you're deploying to the female smallholder farmers. So they have
Even when you compare states.
Exactly. So there's differences on state, there's differences on gender, there's differences on age.
Types of businesses.
Exactly. So a lot of people within the small... Recently, we see younger people coming into the space. But prior to now, you see older people. And the rate of adoption of digital services for the older ones is different. So you need to think about, how do I deliver these services using voice notes for someone that cannot read? How do I deliver this voice note for these services to a young person, yes, that can read, but doesn't have the patience to go through XYZ steps? Right. So it has to do with a lot of creativity, innovation around product development, around deployment, also bearing in mind the cost of delivery of these services to the smallholder farmers.
All right. Thank you so much for joining us this morning. And thank you so much for telling us what FX is doing and how we can expand when we talk about financial inclusion for the smallholder farmers.
You know, from the digital financial service providers and also the farmers. So highlight some of this risk for us.
So, well, again, risk with agriculture is always there. But a lot of time it's just lack of understanding of the risk that is making a lot of people shy from that. Part of the risk you talk about when it comes to farming, you talk about production risk, right? And production risk really is, if I give a loan to a farmer, what is the probability he's going to pay me back? Again, I mentioned a lot of them do not have any form of identification, no data And in cases where you have data, the data are not correct, right? So it's almost pretty much difficult for you then to now channel resources. So production risk is a key one. There is also market risk. When they produce, how quickly do they have access to sell? How quickly can they sell these
Well,
things?
it's a whole lot of
It's a whole lot of
yeah.
it's a whole lot of challenges.
Well, thank God we have AFEX every week, so we can always explore
Sure.
in the coming weeks. Thank you so much for joining us. Oluwafuntola Shemo, Financial Market Vice President at AFEX.
Thank you very much.
Enjoy the rest of your day.
You too.
So let's switch over to the markets now. Yesterday, I think the markets ended a crossroads in betwixt. I don't know. But well, will help us understand what happened in the market yesterday. If it went up, I know it was the bear that we had at the end of the day. But anyway, let's take a very short break, and then when we come back, Will is already standing by to give us details of it. Will, let's have the details.
Good morning, Nini.
Good morning.
And you were so right. We are at a crossroads. The equities market closed on a flat note in yesterday's trading session. The market apparently doesn't appear to be moving in any significant direction, and investors, as it may seem, need more market information to activate buy-side activities. Now, although the value of listed equities decreased by just ₦1 billion, the market's benchmark performance closed relatively flat, as we can see, as despite analyst expectations that investors will cherry-pick attractive stocks, particularly in the banking space. Instead, we're seeing more profit-taking activities persisting in some banking stocks like GTCO, UBA, and Eco Bank Transnational Incorporated, ETI. And now let's keep in mind that ETI recently received an investment of $75 million from a private equity firm as additional capital for its operations. Look at the activity chart. We said that there was a jump in the volume, value, and deals yesterday, climbed significantly. And on the sectoral performance, the oil and gas consumer goods indexes recorded gains, while insurance and industrial goods declined. The insurance goods was flat. We had a ray of hope at the unlisted market, though. But when we quickly move to the fixed income market, we see that at the OMO market, it was really investors are waiting for despite the OMO rollover that had a 119 billion naira that was rolled over, that boosted liquidity in the market. The OMO maturity that we had, the treasury bills market opened on a very cautious note. Investors are taking their time waiting for the auction today to make further investment decisions. And we have Choma on the line to tell us what's going on today. Good morning, Choma.
Good morning. Thank you for having me.
It's good to have you today. To talk about the happenings there, tell me what's going to happen. We see that investors are having a field day today. We're seeing a rollover of about 138 billion naira worth of NCB bills going out today at the primary auction. And some analysts expect sustained high bid to cover ratio in the primary auction. What do you think about that?
Well, with the liquidity that we have in the market, like you rightly said, we have 119 billion in the market, and then we have 138 billion on offer. It's going to be like a recap, and then we expect that there's going to be some interest in that space. We expect that the 1 year will moderate slightly. It's currently closed at 6.8 in the last PMA auction. We think that investors are not really very happy with that rate at 6.8. So we're going to see close around that 6.8 level, or a very slight moderation, while we, hope to see more operations from the CBN on Thursday.
And do you also expect to sustain moderation in the stop rate, especially for the 364-day offer?
Yes, that's my expectation. Just a subtle moderation. As investors think that this rates are trending very low. So we just think that it's going to be a subtle moderation in that space.
Okay, great. Also, do you envisage a bullish outing in today's trading session, especially in the secondary market?
Well, the secondary market is going to be very quiet. We expect that sentiment will be so quiet, and then there's going to be bias that rates are going to trend down. So we think that what we're going to see, even if there were going to be any trades in that space, it will be on a bullish trend, but basically a quiet market expected in the secondary market.
So it's going to be a quiet market. Do you see investors also cherry-picking attractive instruments, especially short-term bonds that advanced last week?
Well, rates in the bond space, especially at the short end, like on the 28th, are currently trading at about 11%. We see little interest in that space. This is a yield game for investors or any investor. So what we expect is that investors will just shop around to try and get the best yield from any fixed income, especially at the short end of the yield curve, so that they can quickly rejig their position when the yields start trending up.
Thank you so much, Choma, for your insights. Choma Udu is a fixed income dealer at PT Bank. So, Ini, that's what we have for you. Back to you.
Yeah, thank you so much, Will. And we'll take another break now. When we come back, we'll head to London to stay with us. You're welcome back. We'll head straight to London now, where we have Juliana standing by. Hello, Juliana. Good morning. Okay, so the proposed hike in national insurance is obviously getting different reaction from different quarters. What's the latest?
Well, I think much to the dismay of the opposition, I think it's pretty much landed quite well with voters. I think yesterday, Prime Minister Boris Johnson, he made the announcement in the House of Commons that national insurance payments from April 2022 would rise by 1.25% to help fund the massive crisis that we're seeing in the NHS and the social care system. And I think some commentators did believe that perhaps people would be pretty ticked off about this, but people aren't. I think the timing is quite well, and that's really because everybody knows that there was going to be some sort of tax hike in the UK at some point. And even though this will cost the average salary earner, if you're earning about £30,000 a year, it will cost you an extra £250. We know that the money has to come from somewhere. I think one of the big questions, and this is going to dog Sajid Javid, the former Chancellor of the Exchequer, now Health Secretary, is this money going to be enough? Is it going to do what Boris Johnson and the government say it will do, which is cut NHS waiting lists, help improve the social care sector, and make the Britain's National Health Service a treasure that it once was? That's the main question. They're going to be raising £12 billion a year. Is this money going to be enough? And that, I think, is going to be one of the major concerns in the foreseeable future.
Well, good enough. People are embracing it and seeing the essence of it. But Brexit Minister Lord Frost has announced an indefinite delay on checks on goods arriving from Britain. What's the implication of this?
Yeah, another major story. Luckily for the Prime Minister, it seems to be hidden in the news pages because of all of this national insurance hype. But yes, another day, another Brexit delay. I think there are concerns in Brussels that the contentious Northern Ireland Protocol is going to lead to Britain just not accepting the withdrawal agreement that has been signed into international law. This is the third time there is going to be an extension on the grace period, first in March, the second time I believe was in June. Now, from the 1st of October, Lord Frost says he still doesn't want to start checking goods that are going between that Irish Sea, that water between the island of Ireland and the rest of the United Kingdom, because it's causing so much friction on the other side. And that's what the Northern Ireland Protocol was supposed to avoid, tension between the south and the north. And of course, as well, it's causing massive delays for businesses. There was a legal paper put through by Brussels the last time. That was suspended, but there potentially will be more legal action. We'll just have to wait for an official statement from the European Commission.
We'll certainly wait. We'll have a lot of time. Thank you so much, Juliana, and talk to you later at 1:30. During Business Incorporated.
Thank you, Annie.
So let's take a peep into the crypto market with Laddie Williams. I know El Salvador did something to Bitcoin. We all thought it should mean a good thing, but
yes,
I don't know.
It was supposed to be a good thing. It was a good thing. You know, pumped the market up.
It was a good thing yesterday. It doesn't seem like a good thing today.
Today, not much of a good thing. It's the crypto tsunami. We have all red. No coin is spared. Bitcoin down about 15% yesterday, over 15% actually. Ethereum below the 4,000 mark. We can only have about only two or three greens in the market. Even the stable coins are not spared. Over $20 billion wiped out from the crypto market. Market cap, $2.05 trillion. It's down 13% this morning. 24-hour volume, $241.64 billion, up 67% because of the massive sell-offs there. Bitcoin dominance, 42.35% this morning. And price of Bitcoin, $45,605 at 8 a.m. this morning. It's down 13% this morning. 24-hour volume traded in Bitcoin, $65.58 billion. Price of Ethereum, $3,300. No altcoin is spared in this market. Down 14% this morning. 24-hour volume traded in Ethereum, $14.21 billion. Some say the massive sell-offs are because of the El Salvador rollout glitch that actually happened yesterday. Let's take a look at some NFT news now. We have Babylon's NFT having their first token burn about 136,000 tokens, and that which will be taken out of circulation. But even Babby wasn't spared in this sell-off. Babby is down about 20% this morning. Staking pools are also almost here, coming soon. Top of the market cap, it's incredible. Double-digit losses, 18.71% for BNB, $404. Cardano, $2.38. It did cross that $3 mark, but now we have it down 15% this morning. Doge hit hard there, 24 cents, down 18%. And the biggest loser, XRP there, $1.07, down 22.47%. Hope you were lucky to take profit before this crypto tsunami. Anyway, let's bring in Solomon Amunde now to bring us up to. Hello, Solomon.
Yeah, good morning, Ladi.
Good morning, Solomon. Now, we had that good news about El Salvador yesterday, but we have massive sell-offs today. What's going on?
Yeah, we had massive sell order at 52,000, and we just that was inevitable. And also, we've had a fantastic run from 29,000 within a month, and we've been able to hit 50,000. So the correction was actually inevitable too. So something that I was expecting even from 49,000.
Okay, so would you say it's the El Salvador rollout glitch or just an excuse to liquidate the longs?
I wouldn't say so. I would say the retailers were being too confident that Bitcoin would go to 58,000 without any form of correction, forgetting that we haven't had any reasonable correction since we went past $40,000. So I think the market just played out the way it was supposed to play out. So, and I think this was also caused by massive leverage in the derivatives trading.
Okay. All right. So this sell-off is an opportunity for some, traders. But what are you looking at, and what are you doing right now in the market?
Currently, I'm looking at Bitcoin still going down to about $42,000 before I can be able to start taking good long positions. So right now, what I'm doing mostly is I'm shorting the market. I'm waiting for it to go back to 47, 48K, and I will place a short trade, and I'll exit around 42, 44K.
All right. Sounds like a plan, Solomon. Thank you so much.
All right.
All right, Edie, there you have it. It's even the top 5 gainers. You have stable coins there, and just near protocol up 26%. This is practically the only one in the green. And look at the top 5 losers there. You have Theta there down 31%. Filecoin, $78, down 28%. Atom, $19.60. It's down 27.91%. So it's not looking so good this morning.
Well, it also sounds like Solomon had taken his profit before the tsunami. That's how it sounds.
Yeah, that's how experienced traders roll. They know when to actually take profit. Sometimes the not so experienced traders get caught in the crossfire.
Greed. Well, that's it on the program. Thank you so much for being a part of it. It's been an interesting one. We hope to do this again tomorrow. Do join us then. But before, later on today, we'll have 1:30. At 1:30 p.m., we have Business Incorporated, where we'll bring you developments from the world of business. Do stay with us on Channels Television. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.